Everybody, welcome back to Cashflow Chronicles. Happy Valentine's Day for those of you that celebrate. Kris, you doing anything for Boss Lady?
I got her flowers yesterday. She had work today, so me and her went to a restaurant yesterday for Valentine's Day dinner/lunch.
Dinner/lunch. You're a good man.
Yeah.
Good man. Another great.
I forgot last year. So my brother-in-law's like, I got the flowers for you, so I had to pay him to do it for me. So this year I was like, no, I'm not getting charged. I'm gonna just buy my own flowers this year. So I made sure I got it ahead of time.
There you go, dude. Planning ahead. You got the whole family helping you out. That's awesome. Marcus is still doing really well. Nvidia, Jesus, almost at 750. The Bros 27.75. Apple still kind of pulling back.
Can you pull up our portfolio?
Sure. Yeah, I'll pull up the whole portfolio. I'm just talking about the ticker symbol down below.
Oh, gotcha.
Let me see what else. Let's walk through that. But the portfolio is good. It's healthy. We definitely need to talk a little bit about that. SPY just a shy below $500. QQQ 433. Palantir still hanging above 25 bones. Amazon above 170. Bitcoin 52,000. Oil's hanging in there at $76, which is a surprise. And then natural gas is still in the crapper. While I pull this up, Kris, I know that there was a few items that you wanted to talk about today. Let me blow this up as big as possible so when I snip it,
I had to do the same thing. Yeah.
Let's see. So yeah, the personal portfolio, or not personal portfolio, the Cashflow Chronicles portfolio is muy bueno today, just based off of Tellurian preferred shares, which we'll talk a little bit about. And then also
actually it's baby bonds. It's not preferred shares. So I'll explain the difference once in a little bit.
Very good. And then also we have the what else was it? Celsius obviously is up today. So we're doing good on both. So let's just hop to that, and then we can diverge after that if we need to. So hopefully that's a little bit bigger than it is normally. I cut off one or two of the whatchamaguys. So hopefully that helps everybody. But yeah, the big boys today was Tellurian, the 825 bond convertible bonds or whatever the hell they are. They were up $23 today. It's 13%. So we have a pretty good chunk of change in that. And then Celsius, we have 7 shares. The stock itself went up about $2.68 today. So that was up almost $20 for us in the portfolio. We have now crossed $1,700 in our portfolio.
Nice.
Up almost 5%, literally just from yesterday. We were talking about 10% yesterday. We're up literally almost to 16% in the total portfolio.
Yeah, and hopefully these dividends, when they start coming in, those will add to the add to the bottom line as well. Yeah.
So well, that's the thing, is like we've sold a lot of the stuff that we have sold in the positive. So there's hopefully going to be some sort of compounding effect, because like there's other things in here like Orsted I've thought about selling at a 25% win to potentially put in and just keeping cash maybe, or if we find something prudent to buy. But just as like I feel like we'll end up having the ability to kind of compound a little bit if we sell. But curious your thoughts about what's going on. I didn't think that you would see this kind of a 3.5% gain in just the portfolio today, considering the rest of the market was not up 3.5%, but it was up a little bit, nothing too crazy.
Yeah. Well, so if you look at the main one that we had that did really well today was the Tellurian. Tellurian's baby bonds are starting to really go in appreciation mode, primarily because there may be light at the end of the tunnel with regards to a possible acquisition. And so if they get acquired, that thing will jump to $25 overnight. And in the meantime, we're still collecting 8.5% on our initial investment. So that means that per quarter, and it pays out quarterly, we're getting a good amount of money, based on the shares that we own, of course. So I know a bunch of people on my Patreon that own a good portion of Tellurian. So they did well today. They've been collecting the premiums nicely, So, and I think the same thing's going to happen with BPYPM once we get a little bit of a recovery in the office market. The office market, I think the data that I'm seeing is showing the occupancy rates are starting to come back slowly. Even mall operators, like Class A mall operators, they're starting to come back. And so if you do a comparison with BPYPM, if you know their underlying assets, they have a lot of international assets. So BPYPM, not the BPY got taken private. So this one right here. So this one's pretty good, So it hasn't necessarily recognized all the value yet. But the one thing that I think a lot of people really missed this one is that they started doing they're authorized to do a buyback of these preferred shares. I don't know if you saw that. So that'll be a nice little catalyst for them. So not only are you getting a 13% return on just holding these things per year, because you get a nice payment out of them, but also the capital appreciation will get back to 25 eventually. So, you think about it from where it is, it's almost double,
Yeah.
So.
Yeah, and we've been accumulating on this one. Let me see, at 13-ish. So our cost basis on BPYPM is at 13. So we're at cost basis here at the moment, just kind of collecting that dividend. And like you said, it'll be like 3% per quarter. I mean, it's not going to be chump change. So it's almost like a 1% per month dividend that we should be expecting, and we should be getting it here in short time. And as far as I know, we're not reinvesting dividends at the moment. We're just getting it in cash and then choosing what stocks we're picking. But I'm curious to see this one. Like, I anticipate eventually it's going to have its TELZ sort of moment, right? TELZ, we're up, 14, 15% on this one. I mean, like you said, $25 is where we expect this one to go. Can you remind me, because I forget, is this one 2026 or is that the TELZ that's 2026?
TELZ is 2026, I think.
Okay,
Double
so
check.
This is the 2028 boys, right? Okay. So.
Yeah. Well, this one, remember, this is perpetual, so it's never gonna. 2081 is when the thing gets redeemed. Like forced redemption is in 2081, so it's not gonna happen anytime soon.
I might have been thinking about because I was looking at this one. It's not one that we have together, but I was just looking at Next Era.
Next Era.
This one's 2025. I don't know. I'm trying to think. Why did I come up with 2028? Anyway, not important. But interesting thoughts, man. I was listening to you talk about Uber. I didn't realize how big of an Uber bull you were until listening to Finance Junkies. I never really heard you chat much about that one, but we don't have to dive deep.
Me and Sean from Invest to Live. We did an entire episode, like when it was in the 20s. Let me just, and that was like the one video that I left on my channel because I didn't want to just keep doing it over and over, talk about it over and over again, but here it is. If someone wants to check it out, I'll put it in the.
That's pretty crazy though. I mean, I never really thought about it really in the past, I would say 6 months or so. That's before you were wearing a backwards hat every live stream. So
that's my old mic too. I tried, dude. I tried to do YouTube on my own. I couldn't do it, man. Dude, it really wasn't my thing.
Analytics work.
It's interesting, man.
Sean and me
broke. I don't remember the price. Called a quarter for a crossing. Cost the same time every day, 5 times a day.
It's so interesting seeing these videos, man.
Yeah, it's kind of like anyway, interesting enough. I'm trying to think. So can you explain really what's going on with these baby bonds for Tellurian though? Because while I understand they are selling the upstream assets and they're trying to fetch 800 to 900 million, why does that mean that the baby bonds are going up, right? Why does that mean that everyone's so excited? They think, is it strictly because they see movement and you're not in the stalemate that you were with Suki as the chairman and CEO, and now we're actually seeing that something might actually happen with this? And I'm also curious as to what buyers are really looking at this, because now that we're talking about potentially shutting down additional approvals, which I anticipate would be overturned, and in a non-Biden administration. But just for now, while you're still sitting here with no more further approvals for other LNG going on in the United States, this becomes more of a hot commodity. So curious about your thoughts.
Yeah, no, I think someone's going to be a takeout target. If someone takes them out, the change of control provision gets automatically exercised, which means the bonds become due right away. And I think the bonds are outstanding are not that it's not a lot of money that those bonds are outstanding. So whoever the buyer is would have to immediately pay the bondholders right away. So that's why you're seeing some valuation jump up. So I think someone else, if they come in, it's definitely going to be something where they make a play for the whole company. I doubt that they're just going to do the upstream assets by themselves. So if they make a play for the whole company, means that the change of control provision takes into effect. Boom, you get the $25 right away. If not, if they're able to sell their upstream assets, they get a crap ton of liquidity, in which case now the bonds are a lot more, safer, basically. In the case of a bankruptcy or anything else, bondholders will get paid out first. So,
And so to give people the reason why Kris thought that TELZ was a good opportunity in the first place was because they're selling at a huge discount comparatively. It was almost like 60% off of the $25 sort of price tag. And so if you bought it at $12, which we were hoping to buy it at like 9 or 10, and unfortunately I think we got it in like closer to 11ish. Let me just double check. Our average is 11.50. Yeah, so Kris kind of had his eye on it in like 9.50, and then it started having some rumblings, and so we ended up getting in close to like 11.50. But if you have that 11.50 re-rate back to $25, then shit. I mean, you just doubled your money and you're collecting a dividend at the same time. And keep in mind that we're at a 6.25 dividend for 8 something for which one. Wait, I'm trying to remember which one's which. I always get them mixed up. So
this one is
8. Yeah, 8.25. So this one we're getting like a 16% annual yield on, maybe more.
No. Do your math. If it's 8.25, right? And we bought it at what
11.
What did we buy it at? 11, right? So you take, let's just do quick math. You take 11 over 25, right? So that's 40. Sorry, I mean that's 25.
Yeah, do your math, Kris. Do your math.
Hold on one second. 11 over 25.
What is it?
44. Okay, hold on.
What did I say? 16. Did I say 16? What did I say?
So it's 2.27 times 8.25. It's 18.75%.
Yeah. What did I say? I forget.
I don't know.
It was above 30. It was above 12. I don't remember what I said. I think it's
18. It's 18.5% yield right now on it.
Yeah. Oh, right now?
No, not right now. When we bought it.
We bought it. Yeah, I was about to say.
Yeah.
So yeah, you think about it. In the meantime, we're collecting that. It's about 1.5% a month. So it's a nice little addition to the portfolio. And I honestly am thinking about this. The upside associated with Tellurian, the whole stock itself. Next, NEXT, that pretty much has the first 3 trains. There's 3 out of 5 trains at the moment. They're to sanction the first 3. That has like 92% of the volume that's supposed to go through pretty much booked out. I don't think Tellurian is at that extent yet where they've actually pre-sold all the volumes. Can you correct me if I'm wrong on that? I don't know.
We have to look at their investor relations.
I don't know if I've actually seen that piece, because that's part of the reason why, like, when you're seeing all these deals with NEXT kind of starting to go through, it's like, well, at that point, you kind of already know what you're going to get. And the first train for NEXT, actually, the first 3 trains actually isn't where you're supposed to be making the money on NEXT. I think the upside with NEXT is really going to be realized when they sanction the second part of the project, which at the moment doesn't have any volume sold, and also they own more percentage of those secondary trains. So
yeah. So you can see here from an ownership standpoint. Give me one second.
This is NEXT, right?
Yeah, this is NEXT.
Yep.
This is Rio Grande. Remember we spoke about all the counterparties, strong counterparties. But more important is right here. Okay. So if you look at right here, phase one, 92% of the contracts are already done. They're still going to get a percentage of it, but it's not going to be substantial. So the economic interest in the first phase is going to be 20% for next decade. So they're going to be the operator, in which case this is how much money that they'll be generating, right? So right here has been funded from cash received from blah, 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 blah. These guys are going to be the other economic interest holders. So the financial and the guys that are really paying the bills are these guys right here. So Mubadala, I think that's Abu Dhabi's investment fund. GIC is Singaporean. So the infrastructure is being paid by these guys. These guys are providing the know-how to build these, not the know-how, but basically the operational control over these LNG trains. And then Total is a strategic multinational, which they're the ones that are committing to buying a bulk of the LNG that comes out of this. So you see how all three of these things kind of work in sync. Now, what's going to happen is once the economic interest for this starts to generate money, you know, each person is going to get their return. So these guys are going to get their return for their shareholders over in Abu Dhabi and Singapore and so on and so forth. Total is going to be able to make money on their LNG exports. And these guys are going to be making money on the operating aspect of the LNG trains. What's good is there's already room for expansion. So when they expand out to the other trains, the economic interest for these guys actually goes higher, because you see this right here. This is for phase one, but then you look for trains 2, their distributable cash flow is going to grow even more. So the first
Phase
three
two.
trains,
Phase two, you meant.
yeah, phase 2. So the first 3 trains, they're going to be generating about $200 million in distributable cash flow. Trains 4 and 5, they're going to generate about $1 billion. And then and then if you combine all 3, they're going to be generating between 1.3 and 0.9 billion in distributable cash flow for the next 20 years. Yeah. So you do the math on how much return that is, especially considering next decade right now, their current stock price with their market cap is 1.27 billion. So if they're generating 1.27 billion in 2027, that means that every year they'll be generating $5 in income that gets distributed. So yes, you're buying now, but you're going to be like, this is like something that could build generational wealth if you think about it. Because imagine right now you buy $10,000 in 5 years, this thing could be generating every year $5 for you. So you're generating 100% of the money. The thing is, it has to get all the way to the end of their thing. So, and if you look at LNG, it was the same exact thing, which is Cheniere Energy. So if you look at the unit economics, that's exactly what happened. Look at this. If you had bought Cheniere at $3 a share, right? $3 a share in 2010, even around here, you could have bought Cheniere. Look at the dividend that you're getting. You're getting a 1.2% dividend on this, but if you look at the price, the dividend per, let's do it on a per quarterly basis. Where's the dividends? Historical data. Let's do dividends only. Apply. You can see here they're giving you 43 cents per quarter, which amounts to about 80. So let me just do, so 43. So that's
60.
$1.60. So if you bought $3 at the time, 10 years later, you're generating 50% yield on that money. So if you put 100,000 back then, right now, not only did you get the capital appreciation from the stock going from $3 to 150 something, you would have got that $50,000 of additional dividends every year. The thing is, it's about foresight. This is one of those things where you have to have the foresight now and invest in it now, so that in the future,
and the risk tolerance, to be honest with you, because this thing could honestly fall apart, and it could be the point where, kind of like what Kris is saying, it's like they might only have 200 to 300 million cash flow, distributable cash flow, right? They might not necessarily get to that point where they sanction phase 2. I don't know why they wouldn't. I mean, if you think about it, if they're getting 200 to 300 million dollars a year, that'll be substantial enough to be able to get them. But these things are expensive. They're $1 billion projects. I mean, they're not something where you spend,
they're not billion, 200,
tens of billions. Yeah,
tens of billions.
So in order to develop like 1 MTPA metric ton per annum of like export capability, I mean, it's a lot of it's probably close to $1 billion per MTPA.
Yeah.
So when you're talking about what we're talking about with Tellurian, like Tellurian, that's like man, I think they're trying to sanction all 27 MTPA at once, which is a little bit bigger than what you're going to be getting at NEXT, but it's a monster. But I don't think that they have the capital backing like they do from like Total does, right? That where Total's backed NEXT, and then that's part of the difference with the two is like Total, and you had these other investors from, I don't know if it's the Middle East or Asia, like you showed, had that 62% economic interest within phase 1 of NEXT. I don't think they have those structured deals at Tellurian like they do. And so that's the part where you're like, okay, NEXT at this point is a little bit more concrete in terms of being able to get to actual export. Tellurian's still kind of up in the air where they haven't actually started putting shovels in the ground. NEXT has, but you have a lot more upside potential with Tellurian at the moment because of the same reasoning. They don't necessarily have it, but at the same time, do they have the actual wherewithal to survive? And that's where the problem is right now, where they're trying to market the upstream costs to save the actual export LNG piece. So it's an interesting kind of piece. If you have the risk tolerance, you could be rewarded pretty handsomely. But once again, it's about where you sit in your risk profile.
Just imagine someone who had bought Tellurian $3 a share, $100,000. They could have dumped it 10 years ago, right? Imagine how much they have right now. That's private jet money.
You mean LNG? Yeah.
LNG. Yeah. That's private jet money. So it just goes to show that there are opportunities like
my
that.
bonus is coming in March. Maybe maybe I gamble. I'm like, here's my
advice. Here's my advice. Take about a nice chunk, like maybe 100,000 if you can spare it. Buy next decade and put it into some fucking weird account where you just forget about it for like next 10 years. And in 10 years, you'll wake up and you'll be like a millionaire. You know what I mean? Because by that time, everything will be, just forget about it. Don't even think like that's my
yacht fund or your
that's my Epsilera play. Like I have a whole bunch of Epsilera that I'm down like a good amount, but I don't care. I'll look at it 10 years from now. I'm not going to look at it every day. So next decade right now, just put about 100K, 200K, just shove it somewhere, and that'll be your private jet fund. By the time you'll be like 40,
Yeah, so, these are definitely one of those coffee stocks. A lot of these things that we're talking about: ABCL, TELL, NEXT, TELZ. I think is more the one that it's kind of like a quicker term play, hoping for a buyout or something like that, which I think is probably pretty likely. What isn't Total building synthetic natural gas facilities? So there's a lot of interesting plays going on in the natural gas space, and I don't want to dive deep unless you guys are interested, because I know people's eyes generally gloss over because I think oil and gas is dead, but it's actually what's keeping the world running right now. But there's a lot of landfill gas and things like that are really trying to focus on reducing emissions. So when you think about it, landfills, they generate a pretty large, significant portion of the methane emissions that are going on in the United States. So the hope is that if you actually capture a lot of that, you're able to get 50% CO2, 50% methane. And so if you're able to strip out the CO2, you actually have a pretty good stream of energy that
Matt,
you can use from that.
I hate doing this, but I got a call from one of my colleagues. He's supposed to be covering 4 to 12, but
you're good, man.
He says he's off, and so he's like, "What do I do?" And I'm like, "I'll sign up. I'll sign in because I think they're having some IT issues at work." No problem, so I usually take over the shift after, so I'm gonna have to eventually deal with it anyway. So like, might as well deal with it now. So I'll talk to you,
brother. All right, my guy. I'll talk to you tomorrow. Cheers, brother. So for those people that are tuning in, and actually, I didn't want to put Kris on the spot because I know he already kind of addressed it a little bit on Finance Junkies. Celsius stock is actually doing extremely well. So I just want to applaud everybody that has been continuing to do the due diligence and following along, as we've kind of been trying to focus on a good time to enter. And more recently, and I can't I've done okay, but other people have done extremely well. So for those people that have done well, congratulations on the stock. I think it's been a lot of fun for me to be able to watch. It's something that's a little bit different for me. I don't really do. I'll just be blunt with you guys. I don't really do this long call sort of thing. To be very blunt with you, what I generally do is more of like a long-term investment sort of horizon. And this stock wasn't cheap enough to go ahead and do that. But working with Hot Chris, it was fun to kind of to discover this one. And so just today alone, it's up 5-6%, and it's been in this sort of channel. So we've been kind of covering it throughout this entire time period from August to kind of now. And I didn't buy at the exact bottom, but I did buy in the low 50s. And so with that, it's been a pretty good run, and I'm anticipating it's going to continue. At this point, I'm kind of just waiting to see what happens in earnings on the 28th. I'm curious to see what ends up happening, because if it does moon to say the $70-$75 range, I'll probably end up taking my opportunity to sell some longer dated calls. And it's been fun to be able to see how this is developed, because specifically these long boys, when you look in 2026, and I might not necessarily sell the 2026 100, or if they come out 110, 120, I guess it all really depends. But it would be hard pressed for me to see that this goes beyond 100. But it could be something where I come back in here and look at depending on what happens after earnings, come back here and try to sell like a $85 or $90 call for 2025 and collect a little bit of that premium. And my anticipation is, I think a lot of people are thinking that there's going to be some sort of rebound within this company, in terms of the recent dip in the share price, which now I guess is closer towards all-time highs. But with the kind of flattening out over the past few months, I think a lot of people are kind of curious, like, why has it been doing that? And I think there's a lot of different reasons. The heirs are selling a little bit, and then coupling that with just people thinking that that they're not all that, it's just a fad. You do see these things come in and out of favor pretty quickly, but the marketing that I've seen for this is second to none as of late, and people are all fired up about it, from all walks of life. So I think it's got some room to run. But I think where you're actually going to start to see is in maybe not the fourth quarter, but more in the 1Q sort of timing, because they announced the deal in like the December timeframe. It's massive year-over-year revenue growth for international sales. So UK, Canada, and I think it was Spain or something like that. And it was interesting to see. I was like, I wonder if Pepsi is doing those sales. Pepsi is not doing those sales. Pepsi is not doing that distribution. And I'll finish up here with Celsius in a minute, and I'll kick it over to the chat. I'd love to have a 30-minute hangout Q&A with you guys before I call it a night. But it was interesting to see that Suntory Beverages actually took the opportunity to distribute in Europe. And so I thought that which is a Japanese company, I thought it was very interesting to see that instead of just an immediate sort of move towards Pepsi, which has done a really good job in the United States. And I think that's a Celsius playing hardball, right? They don't just want to be reliant 100% on Pepsi. And I think while they might have a phenomenal partnership, and Pepsi mentioned it multiple times in their earnings call as well, with the partnership associated with it, I think that they're both trying to explore, Pepsi and Celsius, what's plausible going forward. So I know Celsius is starting to move into other products as well. An actual energy product, which right now the products, believe it or not, even though they have 200 milligrams of caffeine, aren't necessarily considered energy products by Celsius's name, or I guess verbiage. So they're coming out with a 300 milligram post-workout sort of thing. And then they're also coming out with a different formula that includes stevia rather than sucralose, which I know some people are very much against sucralose, for those folks that look into a lot of the chemicals and stuff that they put in their body. They might be more inclined to buy a product that has stevia than, say, sucralose. So I think I'm very bullish. I think that this thing is going to have pretty good year-over-year growth still going into the fourth quarter, and I think that it's even going to have a better first quarter, because I think you're going to continue to see that growth coming from 2023 into 2024 for United States sales, and then I think you're going to see a large increase and tick up in international sales. Even international sales were at 40% from 2022 to 2023 for the year-to-date quarters in September that were reported. So I anticipate you're going to see an even better numbers, because they're starting with such a small base, and now that you're actually getting there, and I think that now that you actually have the brand recognition, other partnership deals with a lot of interesting companies like Ferrari and stuff like that, I think it's going to continue to see some good opportunities kind of going forward. But let's have a good conversation with you guys about what's going on in the chat. Hot Garcia, you're the man, myth, and the legend. But let's just see what folks are chatting about in here. So I'm gonna start at 9 p.m. my time Central and see what people have been putting in. Hope we did something nice for the wives and lady friends. Hopefully that's directed towards the chat, because the only thing I'm dating is my stock portfolio. So will y'all transition to options and mostly stock later on this account? I hold a lot of individual stock positions personally. So yeah, I think while we might cover, say, Celsius options and stuff like that, my portfolio, I would say, is 95%, maybe even more, long-term just purchases of SPY, Palantir, Rocket Lab, a lot of cool companies that I like to invest in. So speaking of Rocket Lab, I was actually doing a quick listen to what Spice had to say at TD. He had an opportunity to kind of talk. And it was interesting. I won't go into too much detail. I'm only a quarter of the way through, 10 minutes out of 40 minutes. And I'll be finishing that up as soon as I'm done with this. But he basically gave some prioritization to everything. So first and foremost, they wanted to get the 20-odd launches this year for Electron. That was kind of priority number one from what Spice had noted. Second was they wanted to make sure Neutron, which is their medium launch vehicle, gets on the pad. Not launched. Whether or not that's different than what they've been saying, I don't know. I've always assumed that when it was on the pad, it meant launched. But I need to go back and just double check that if the verbiage has changed from launch in 2024 to on the pad by 2024, because that might have some differences. But then thirdly, the reusability of Electron and Neutron and stuff like that will be kind of taking place third. So if anything were to fall off, it would probably be the reusability piece. They're mostly focusing on Electron and the Neutron rockets. So Hot June wants some chocolate. Rob H, happy V-Day, my guy. Charles, what's going down? Loves baby. We got Michael Wilder in the chat. Seas Candy. I've never actually had Seas Candy. Interesting. You did not get notifications. Well, it sounds like you need to turn notifications on, my guy. Market is still red hot. I agree. Celsius is still running after hours. Every time after hours, it just reminds me of the Weekend song, which I absolutely love. I love that Weekend song. Why would they not be able to sell their upstream assets? What is there to consider? I think it wasn't necessarily that they wouldn't be able to sell the upstream assets. It's just that somebody would recognize the synergy, right? Because it's upstream assets plus the pipeline directly to the LNG facility. And so selling just strictly the upstream assets, you'll be able to recognize money. But if you look at natural gas prices right now in the United States, it's $1.80, below $2. So if you're drilling and you're only getting $1.80, $2, no bueno. But if you're able to take that feed gas, very easy, cheap, put it in the pipeline, sell it to Japan for $13, you're able to 6x your money in that respect, right? So you can take it in the United States, sell it at local markets, versus put it in a boat, sell it in Japan, sell it in China, sell it in Europe for a much larger spread, right? And that's kind of what all these LNG facilities that are on the Gulf Coast and on the Texas coast have really been focusing on, was because previously, before we had a lot of this shale revolution stuff in the late 2000s, early 2010 timeframe, we were always anticipating we'd have to be importing from Russia, Saudi Arabia, etc. Now you don't hear about the total reliance on Saudi Arabian oil. We're making 13 million barrels of oil per day. Natural gas prices went from $8 to $10 in the United States, or even $13 at its peak in 2008 timeframe, to now being literally less than $2. And I remember when I first started at UDOC, the internship that I had was in our natural gas business in the United States, and it was $1.80 for the natural gas that we were selling. And so, comparatively to where they were just 5-6 years before that, when they were selling things for almost 7-8 times the amount, everybody got a bottle of champagne as soon as they walked in the Christmas party. Next thing you know, people are not getting champagne when they walk into the Christmas party, if there even was one. So just some food for thought. I think there's a lot of synergies associated with buying all of Tellurian, and I'm actually curious who ends up with it. Really, unsubscribe and subscribe. Well, it's a big circle, as they would say. Want to tell to get acquired so we get more dividends first. Not necessarily. If TEL gets acquired, then that means that the basically they pay out the face value of the baby bonds, and right now we bought them for, I guess, $11.48 or something like that, and they would be paying us $25 for face value, right? So we basically bought them at a huge discount. In the meantime, before that happens, though, we'll be getting a very good dividend. So hopefully that makes a little bit more sense and adds some clarity. Would you add more TELZ now, or you're good? I personally don't have any in the portfolio. I'm more so, although, it actually could be a good win if somebody's looking for it. I still think there's some hair on it, though. But I think it all just depends on what kind of investor you are. I don't have a lot of excess capital at the moment. I might take an opportunity. I'm thinking about selling Orsted. I'm up pretty good in my personal portfolio in Orsted, and also the public portfolio in Orsted. So I might take that opportunity, not necessarily for the public portfolio, but for my personal portfolio. It's a very small position as well. It's not very large. And so it's kind of like, will it actually come to fruition? And I think there's also a lot of quick money that I made on that, 25-30%. Within the last, say, couple months. And to me, that might be an opportunity for me to put that into something like a TELZ, where it can kind of get a little bit of income. And if I need to sell that, if I find another opportunity that I think might be better, whether that's RKLB or something of the like that comes up, that can kind of be a cash account. And so there's also a possibility that TELZ goes back down to $8-9. You have to wait till 2026. But if you think about it, there is kind of a deadline on that, and you're kind of within the next 20 to 24 months of having that kind of be paid out. So if you think about it, and just if you were to buy it today, at the $14-15 price, it might not be the best, but if you're able to get it at $12.50, $13, and they have to pay you the face value of $25, then you're looking at close to 50% per year. It's not a bad deal. And then you couple that with the dividend that you're getting paid. So really just all depends on your risk tolerance and stuff like that. Yep, exactly. Zocold knows exactly what it is. Total's a good one, man. They're moving along with their renewable strategy, and I think that they're doing a pretty damn good job of it. So, but I don't want to hype up and speak specifically on oil and gas, because then I might get myself in trouble. Talked a little bit about the synthetic gas. Name the yacht next decade. I like that. I like that a lot, actually. This is financial advice. This is not financial advice. I heard Kris say that, and I was like, God damn it. Hot Kris, man. Yeah, Kris does a good job. He's a sniper. He knows what he's doing. And always feel free to check his Discord out and everything like that, and the Patreon. I'm in there as a support. It's not mine. I don't get any credit or anything for it, but I know that there's kind of like the symbiotic relationship with helping in the Discord with Kris and the folks that come from the Discord to watch Cashflow Chronicles. And so I'm very appreciative of that. And always, to be honest, love the good conversation. I learned from as much as you guys So hopefully you guys are learning from me. So yeah, claps to the Celsius holders, right? So claps because it's a big win today, and claps because it's Valentine's Day. If you catch my drift, you know what I mean. Want to hear about the methane at dumps? Hey man, it just as soon as you think about it, like think about cows and decaying and all that stuff. I mean, all that is just hydrocarbons that basically is just being released to the atmosphere. So if you capture it and you put it in a sufficient place to be able to sequester the carbon, the CO2 that gets released, and specifically utilize the methane, then you have a nice renewable energy source in that respect. And is it renewable? Not 100%, but at the same time, we're creating it. You don't have to wait. If you think about, let me just take a 50,000 foot view on really, oil and gas 101, and hopefully nobody clips this and shares this at work because I'm going to completely butcher this because I'm not actually very intelligent. But what I can say is, generally speaking, what natural gas and oil really is basically decaying matter from previous organisms that have been deposited over literally millions of years. And so what ends up happening is you bury it. And when you bury it, it heats up and basically gets compressed, heats up. And after it heats up enough, it basically turns into energy soup. And depending on how hot it gets, and it takes millions of years to do this, it's cooking for millions of years at hundreds of degrees Celsius over time. That eventually expels from the rocks and tries to make its way. And generally speaking, gas and oil is lighter than water, so it tries to come to the top. Think of vinaigrette dressing, right? You have the oil that always rises on top of the vinaigrette dressing. So it's always kind of trying to seep to the surface of the earth because it's lighter, and eventually gets trapped in either some sort of shale rock or some sort of trap that basically keeps it there, right? So instead of doing that and waiting literally millions of years, what we're doing then is taking the decaying material in these dumps, these trash dumps, and waiting for them to dispel methane, because what else happens with decaying material other than dispersion of CO2 and methane? So if you capture that and you're able to put that into the appropriate engines and fuel sources to be put into power plants, then boom, Bob's your uncle and you're off making money. So it's a good thing for both the dumps because now they're not emitting as much CO2, they're not emitting as much methane, which is a greenhouse gas. If you think about just freely flaring it, or so methane intensity goes down and the carbon intensity of your trash landfill goes down, and then you're able to basically create energy from it. So it's a win-win. You're lowering your carbon emissions. You are then converting that into energy, burning it, because the emissions from burning methane is much better than just releasing it directly to the atmosphere. So that is your, I guess, initial how oil comes to fruition, how gas comes to fruition 101, coupled with why landfill gas might be better than potentially oil and natural gas, because one is going to be forever there and one is more finite, which is just your normal fossil fuels. But we're always going to be creating trash, right? So if you have the opportunity to create methane from that and use that, then there you go. Let's just see. How do you capture it? That's another question. I'm not an expert in that stuff. Monster was ripping for a few years, so Celsius can keep pumping for years. Yeah, and Celsius is about a fifth the size of Monster. So, and they're exploring into different product lines and everything like that. So I think you have some opportunity. Definitely energy drinks. Exactly. I told my buddy that. I was just like, let's go on Amazon, right? You guys want to take a detour? Let's do it. And hold on, let me see what I can and cannot share. So hopefully you guys don't just like let's see. I'm looking at why here we go. Celsius. So Celsius store. So yes, let me zoom in a little bit so that way you don't see all like my zip code and everything like that. So let's share my screen, share my window, Chrome tab, Amazon. So this is the store, right? On Amazon, and you have the normal Celsius drink. So if you go to Celsius, you guys see these, and it's actually pretty cool. You have the non-sparkling. Oh my God. Somebody told us in the Discord that if you put some of these drinks over ice, it's phenomenal. So I've been drinking the peach mango green tea. And at first I was sipping it, was like, it's okay. It could be better, could be worse. I put it over ice, completely different drink, man. And it's like one of the favorite things. Like I will always have some in the fridge just because it goes really well over ice. It tastes like you're drinking an orange juice. It's crazy. So you have the normal Celsius, you have sparkling, non-sparkling sort of flavors. Okay, everyone's familiar with this. So I don't want to dive deep on that. Then you have, let me just double check that I'm sharing. Okay, cool. Then you have the on-the-go stuff. I don't really think that that's really going to take off, but it's another avenue, right? So then you have the heat, which is kind of your 300 milligram sort of stuff. And I don't know if this is the pre-workout or if this is the post-workout. So this is like legit energy drinks. I have yet to see these in stores, but this is like, I think, to compete with like your monsters, right? So you kind of have your jackfruit, your blueberry pomegranate performance. So that's the cool stuff. Then you have your BCAA energy, which I think is like your post-workout. No aspartame, preservatives, high fructose corn syrup. This is post-workout. So 3 different flavors. You have the sparkling post-workout. The berry looks like, and then it looks like you have orange, lime, and mango sort of flavor. So it looks like they're expanding a little bit onto the brand with respect to, not having as much with respect to like energy, but they're focusing more on the fitness aspect of it. And then you have the stevia version, right? So focusing on like the lime, which somebody talked about the cucumber lime. Now that I'm thinking about it, so maybe I'll order some of these because there's other flavors in here that I hadn't necessarily had yet. So you could have the 4 flavor pack, which is interesting, currently unavailable. But yeah, maybe I'll end up with these. But the watermelon berry. So I've had watermelon, haven't had watermelon berry, but somebody told me the cucumber lime is really, really good. And then I'm not a big grapefruit fan, but it makes you think like, how many other things can they really get into? But it makes you think about how, big
Sup,
boss.
dude, I had to call in. Basically, whoever was covering 4 to 12, they are not covering. They're off today, and so there was technically another person covering. But I figured, let me just knock it out real quick. So I called the user. And by the time I called them, they're like, "Oh, everything's good." And I was like, "All right, well,
Thank you.
yeah, pretty much." So I'm like, "All right, whatever." I'm not on the clock, so it only took 2 seconds to dress. So yeah.
Anyway, I was just going through. Somebody had talked about. I told them basically after you had left how great of a job you did on Celsius. I didn't go into specifics, but I basically was talking about how we've covered it since August, and we've had a lot of different talks, and we finally found an opportunity over the past 2 weeks, and how well you're doing, and I'm doing a fraction as well, but I am doing well on it, but not nearly to the extent as you are. And I started talking a little bit. I told them a little bit about how the normal ones have 200 milligrams, the energy drink ones are 300, and we were just going through the product line. So just going through the chat over here. But Google, man, I wanted to like that. This is the thing that it bothers me a little bit. So it's just a difference of opinion and a difference of like how people invest. And just because a stock goes up doesn't mean you have to sell it, right? So like I think one of the questions that irked me a little bit because I don't align with this piece is, and this is because I think Amit has kind of honed in on a strategy that's working well for him. But he was like, "When are you guys selling Google?" And now, like immediately, I was just like, "Oh, like to me, I don't know about you, Kris, but I think Google has a lot of room to run. It's one of those things where I would let the play fill out. I've been owning Google now since the $80 a share range. I've been owning Google since pre-split. I think $1,000 pre-split. So I guess my initial shares were, I guess, close to $50. And if that's the case, I plan on buying more over time as well. This one isn't something I plan on getting rid of. I think it's going to be one of those slow and steady wins the race sort of things where you're always just going to be looking at it. You're always going to have a little capital on the side, and you're going to say, I think it's relatively cheap compared to where I think it's going to be in 2 years. Let me add a little bit more. And that's where I see Google right now, but I could be 100% wrong.
The way I would probably phrase it is there other opportunities in the market that are more compelling than Google? So, whenever I decide on a company, and I think this is the exercise that a lot of people should do when it comes to buying and selling a company, which is, what is the current valuation? What is the valuation likely to be a year, 2 years, 3 years, 5 years from now? Is the market frothy? And is this company in frothiness with the rest of the market? Or is this a company that I know is a long-term winner and I just need to hold it and not do anything with it? And I think that's the thing with Google, that a lot of people are saying, well, you know what? Google's business is being disruptive. Okay, cool. People can have the opinion on that. I don't necessarily think that's the case just yet. Google is still growing by 10, 12% top line. And then at the bottom line, they're doing share buybacks. So, the float is going down significantly. So you boost that up. It's a pretty good return. That's the key. And so I think Google should be a staple for any real portfolio. But I would say there are times to be heavy in Google and then times to be a lot less heavy in Google. You understand? You know what I mean? Like, your incremental dollar is where you should be trying to figure out where to put in, whether it should be good in Google or not. So as an example, I think Google right now, in terms of like AI and value play, is in my opinion, it's a value play compared to a lot of the other bigger names like Microsoft and everything else, whose PEs are, I think, in the 30s and 40s right this point, now. So I would think that Google should be a staple in most people's portfolios. The only thing that I would say is just be ready for this short-term pain, primarily because of this belief that they're being disruptive. Eventually this disruptive narrative, either it'll play out or it'll go away completely. And in the meantime, you can accumulate if you really want to. Me, I'm on the fence with Google only because I would hope that they did more layoffs. I mean, they have a lot of bloat. They're doing the right thing. They are doing the layoffs that they need to, but they're not doing what Meta and Zuckerberg did. Zuckerberg just really went to town and said, look, I need to optimize this business so that people are not stepping over each other. There's no, fiefs being developed, like fiefdoms. You ever heard of that concept, like fiefs being developed in a business?
Yeah.
I mean, once you get large enough, you'll have your cool people, your cool crowd, and then there'll be that crowd. And I'm sure that because you work at a larger institution, you know what I'm talking about, where you have like people that know each other, that advocate for each other based on personalities rather than meritocracy. I've seen that at my institution where, it's not what you know, it's who you know. And when the culture becomes that, it's bad. So I think Google may to some degree have become like that. But, one of the good things is whenever things go bad, it gives the business an opportunity to correct the direction of the ship. So everything that right now people are saying, oh, Sundar Pichai, he's a terrible CEO, he doesn't know what he's doing, blah, blah, blah. The same exact arguments were being made with Mark Zuckerberg last year. The difference is Mark Zuckerberg took a bigger action to correct himself, and that helped out. And if Google takes a very serious, shot at reducing down a lot of their headcount that's really not helping them, then maybe Google value goes up significantly.
Yeah, I think One play that I see also, I mean, you were talking about a large drawdown in the price. I think that there's a potential that that's one of the reasons why the valuation of Google is so much less than, say, some of its counterparts in the 30s and 40s. One, I think the growth is a little bit lower, but two, I think that there is that drag that they think AI is truly going to impact Google search. And so to me, I think that the drag and the lower valuation is evident today, and I think hopefully as people recognize that Google search isn't going away. They've had top line revenue growth really well over the past year, which was evident, double digits, and then coupling that with the 20 odd percent plus of revenue growth that we observed in the Google Cloud platform, I think is a combined business it's going to do really well. So I wrote an article about it. I'm honestly thinking it's going to go to the 185 to 195 range here within the next couple of years. So not going to be surprised as you get close to $7.50 in earnings towards the end of next year. I think it's going to be pretty cheap. Dutch Bros, I'm curious, are you still there's a lot of other opportunities. I know this is more of like a 5 to 10 year play. Have you taken a step back, or is it kind of a wait and see game for you?
I've taken a step back slowly on adding more to any Dutch Bros positions, only because I think the Celsius position is way more compelling in the short term. I think that sometimes when the iron's hot, you just got to strike, man.
Yeah,
you know. So the thing is with Bros, it's still good and it's still growing. It's doing its thing, but it's going to take longer than what I think Celsius is able to return. If you look at Celsius's growth rate, it's significant, and the valuation actually is very compelling for that.
And growing with little cost, right? And I want to bring this up because I had a friend.
It's much more scalable. It's very scalable.
Yeah, and you don't have the capital expenditures that you will with like a Dutch Bros. I have a statement that I had with a friend earlier. He said, well, he was like, what do you think, Matt? Like, I get some money tomorrow. Do I buy more Palantir? Do I buy more Rocket Lab? Do I buy more Dutch Bros? And I'm like, my guy, I'm like, you literally have to take a 50,000 foot view and say, what kind of a company do I want to invest in? If you look at Palantir, it's a very profitable business and continuing to do extremely well. Rocket Lab is currently still burning money, right? So take that in consideration. Then you have the third business where Dutch Bros is making money, but they're also outspending their current cash flow and actually going into, I guess, spending mode, over that piece. So yeah, they might be making good EBITDA, but in terms of their capital expenditures, it exceeds their EBITDA per year. So you have to think, what kind of investment do you want to make, right? One is actually making money, and then you also have to think like what the valuation is. So going back to what Kris is saying, if you were to compare the two, the opportunity with Celsius is almost like a no-brainer because it's expanding very rapidly and also does not cost very much for them to do that. The net income is growing expansively, and then they're not having to spend a lot of capital expenditures because they're partnering very well with Pepsi. So that is not necessarily coming at a cost of having to come out of pocket with cash and everything the like. They have $1 billion of cash on hand, and they have a large amount of net income that's starting to come to the organization. So it's not necessarily a bad note about Dutch Bros. It's just it's at a different point in its wavelength, and I think that Dutch Bros will continue to outspend the EBITDA that they're getting within the organization for a couple more years. I think that their recent float in I think it was the September October timeframe, the 300 million that they did, I think will be very beneficial for them to help fund the deficit between the EBITDA that they're going to be generating in 24, 25 and how much capital expenditures they're planning on having. But that delta is still going to be there. And to me, it's more of like a slow burn, quarterly check-in sort of thing with a Dutch Bros versus Celsius. It's like this run, a majority of it could be had and has already kind of realized itself just by having a good price point. So maybe there's an opportunity where Dutch Bros drops to $19 for some reason, and there's an opportunity to pick up a large position and do something similar. But
yeah,
I personally am having a hold on Dutch Bros unless it goes below 25. I think 25 is actually a decent one. I actually wrote an article about this. I think it's not a bad position to be in, but the valuation is okay and maybe even fairly rich. At 25, it starts to become a little bit more compelling. So, but that said, I mean, if you're looking for a 5 to 10 year hold, I think Bros is a good one, and their lemonade, bro, is just out of fucking control. So,
yeah.
This one's another one for me, Chris. I don't know if you've seen any ones that you like. Rocket Lab, I think, a pretty good one that they stated. So I was just listening to the first 10 minutes of this TD. Their CFO, Spice, as I like to call him, he was at TD today to talk a little bit about it. The gentleman, I don't know if it was one of the head investment bankers that they had at TD, but the first thing that he said was Rocket Lab is the first company that's like fully vertically integrated to be able to create satellites from scratch, launch them, but then also be a merchant for other satellite makers in the space industry. So it's truly one of a kind comparatively to say like a SpaceX or some of these other places and companies that are out on the market. So truly an end-to-end and almost fully end-to-end sort of space maker. They rarely have to go out of the company at this point to be able to provide services, right? They're very close to buying one or two more companies before they can truly be like a legit end-to-end space company, from concept to developing your satellites in-house to operating your satellites once they're in space and actually launching them into space. And I think the big complaints are, the two big pieces are, there's like one or two small companies that they could use to build the satellites, and then they need a medium launch vehicle. And after that, you're kind of done, right? Like there's nothing else that you would want from a space company. And then they could really focus on becoming extremely profitable. So other than that, I think that there's a runway where they're starting to get really good deals. The defense contracts that they're starting to get are rather enticing, whether that's from Space Force or the Department of Defense. But it's going to be some time before it actually shows up as a profitable organization. But in terms of valuation, comparatively to, this is the number 2 space company behind SpaceX. There's no doubt about it. The second most launched U.S. vehicle to space for 5 years in a row, behind SpaceX. So if you're looking for a number 2, these guys are it. And at the moment, they're in cash burn at the moment. So I mean,
I wouldn't be surprised if something like Blue Origin buys them out.
Yeah, that was one thing I was thinking about, because they don't have Class F shares like Palantir or anybody like that, right?
I mean, and Blue Origin's got the money. I mean, Bezos just unloaded a crap ton of money. I mean, I know Bezos came out and he said he was going to do a lot more in terms of like doing the development for Blue Origin going forward. I have to find that interview because I think that's very interesting, where I think they kind of fell back a little bit compared to like the development around that SpaceX has, but they're by no means like a dumb company. Like they're doing all the right things. It's just they're not doing it at the pace that's, I think, necessary. And I think Bezos is actually taking a more active role. Let me see if I can find that interview. 1 second.
Yeah, and then about this one, Chris, don't feel obligated to divulge your position. I think Chris is very transparent to the Discord about his position sizing. So there's always that opportunity. And I think he holds a lot of that stuff close to his chest. But it is, I will say, significantly larger than mine. So that's
which company, which stock?
Celsius.
Yeah, absolutely.
It's insane. So if you guys that are interested, the link to Chris's Patreon is in the description.
Yeah. By the way, someone said, does Bezos selling Amazon bother you guys? No, not at all. It's not bothering me at all.
$2 billion out of a $1.7 trillion market cap. I think I'm good, guy.
Yeah, it's gonna be fine.
What else is there? Oh, Fiji apple pear for Celsius. Interesting.
I'm actually gonna grab a Celsius right now. I have one in the fridge. I think I have like a grape something. So
have you? I was telling people, have you put it over ice yet? Like people in the Discord talking about?
Yeah, I'm the one that suggested it. That's what I.
Oh, was it you? Oh,
yeah. I said put it on ice. Like get it. Really
have you?
I
was telling the chat before you got back. Maybe I did. Maybe you did hear me talking about it, but the peach mango green tea on ice
Mhm.
is just
Yeah.
next level.
Yeah.
It's absurd. But I'm curious what one you get because I'm always looking for a new one. Is it grape? I haven't had the grape.
I'll go get it. Let me show you which one. I
Yeah,
have.
yeah, feel free. Let's see. Somebody said distance yourself from Kris. I don't know what the hell they mean by that, but if you're not a fan of Kris, then I don't know what to tell you. Kris is here to stay. Let's just see. Did you see a 6.9% return for selling the 2026 puts? Would make a nice hedge for buying NEXT. 6.9% return for what? Let me see. For selling which?
So this is the one that I have right now, the wild berry.
Oh, you're a
But
fan of that boy on ice?
I'm not a fan. I haven't tried it yet. Like I'm
I thought
gonna
it was
try it right
okay.
now. I'm gonna get I ordered a case of the fruit punch vibe. That one is my favorite so far. And I have one that's tropical. I had that one the other day. So it was like tropical vibe, I think. The vibes are what are doing it for me. So
I've noticed they're like rebranding almost because I saw something it was called Astro Vibe and I was
actually,
like,
this is not bad. This is good.
yeah, the berries
colors, what I like is they don't even like try to make the colors like, you know how this is supposed to be grape, it's purple. I mean, I suppose it's got a purple hue, but
give me that purple stuff.
yeah, it's not really purple, you know.
Yeah, I forgot what it was, but it was like I had an Astro Vibe today, and I was like, "This is already a flavor." So I think that they're trying to rebrand some of the flavors to be vibe because I think a lot of people are liking the vibe piece. Anyway, 100%. Kris has an idea of where I work and exactly how it is. Network. Yeah, networking is key. Are you avoiding? Kris noted he's not avoiding it per se. It's just that there's other opportunities. Hope they kill it. I don't know if you're talking about Celsius, bros. Pump my seeking alpha. I agree, man. I need to stop being. I need to do well. I'll post some of them. I've done one on Rocket Lab actually for that gentleman that was curious about the Rocket Lab. I'll post my Rocket Lab. I'm actually doing rather well this month, and we're only on the 14th, so I need to do better about posting my articles here. But let me post my Rocket Lab one if people are interested on what.
You know what
Rocket
I'm
Lab.
gonna do? You know what I'm gonna do? I'm gonna make the Patreons for Celsius free for the next week. Like just those posts, I'm gonna put them for free. So this way, let people get some idea. You know, I mean, I think most of the people that are on the Patreon have already kind of like got most of the good info and are actually up a lot anyway. So I think maybe like a post-mortem a little bit so that people understand the value that comes from some really good serious DD. So let me just make it free. There's two pieces to it. So if you're a member, you've had access to it. If you're not a member, you will have access in about 2 seconds once I find it and I put it up there. Yeah. Here's a question. Did you find it valuable? Like
your Celsius or?
Yeah, the Celsius posts.
I thought so. I mean, you and I had talked about it so much in depth by that point, but I still think it was very valuable because it added more of a current view rather than like the historical view, which I had kind of the more historical view. But let me see. You can make it public, I guess, but is it?
Yeah. I had to just edit it really quickly to make it public. But here's the first part. I'll put it in the comment section. Okay. And let me put the other part to it as well so that people can see what the bullishness is for Celsius.
This is a good one. So I put your whatchamacallit, your Patreon link in the description or in the chat box for people. Question for you, Kris. And I know we're getting over an hour long, so feel free if you need to run and start your workday, feel free. but I think we're getting close to the end of these comments. What are your top 3 buys? I'll start. So my number 1, I'd say right now, is Rocket Lab. Another one that I'm long-term holding, which Kris is probably going to like, but I think in the long term is
Palantir.
actually no. I mean, Palantir, I'm still stuck between whether that's going to be a 3x from here, maybe 4x if they actually do buybacks, but a 3x to do I actually think it's actually going to hit $1 trillion? And I'm stuck between, I think it's going to be 150 to 200 because I just haven't seen that. And then maybe I'll be amazed in the next couple of years and it really will start to hit a second, sort of a third gear or something like that, where I honestly think it might be on its path towards $1 trillion. But honestly, at this point, with how it's been selling, I think it's just kind of a supplemental product that not everybody is going to use. And I think that whether or not people come around to it and come and be like, this is the next Microsoft, which I thought it was, could be something, but not just like how not everybody needs to use Google Suite, or not everybody needs to use, a lot of different products, right? I have a feeling that the type of company is starting to shrink. So unless they actually have a more consumer focused product, or they start attacking universities in terms of providing products to universities or high schools or education or something like that, I feel like the cases that I thought once were more widespread are shrinking. And so I could see it being a $150 to $200 billion company. So Palantir at the moment, while I do see the 3x in the next 10 to 15 years, I don't necessarily think is a $1 trillion company, which would make it kind of like a 20x from here. Rocket Lab, I think, is one. TQQQ, the triple leverage NASDAQ 100. That's going to be a very volatile ride, but I think in the long term, that one will be interesting if you can withstand the volatility. Really good on pullbacks in the market. So if you're looking for something to help jumpstart yourself after you've had a, say, 30-40% pullback in the broader markets, look at that. That's probably pulled back 80% plus. And then it'll ride up, back to even at 3 times the pace. And then what's the last one I have Bros, but Bros I don't think it's going to melt my face off. I mean, I think it'll get there. It'll grow, but I'm trying to think if I really have. I mean, I have some coffee money or beer money in NEXT, some in Accelera, but nothing to the point where I'm like super convicted. And so I'm kind of still waiting. And I might do a little bit more in NEXT, knowing now that things are actually moving along a little bit. And Total writes about it. So I think Total's really excited about it. So Total knows what they're doing. So I have a good feeling that, and Bechtel, they have Bechtel doing it. Bechtel's made dozens of LNG plants, but anyway, so I've NEXT might not necessarily be as much of a gamble as it once was. I am
still bullish. I am still bullish on Accelera. Someone said, "Are you still bullish on Accelera?" Yes, I am, but that is going to be like a 5 to 10 year hold. You have to remember they're a drug discovery play, and it's going to be a long time before they get to a lot more molecules into the hands of patients, right? So they do a lot of discovery and then they hand it back to the pharmaceutical companies, and the pharmaceutical companies do all the clinical trials and everything. So it's going to be a while for that company to really move back up again, Mm-hmm. There is another pharma company. I mean, you're in the inner circle, right? So you know about it, right? Mm-hmm. So that pharma company has just been blowing up. I mean, fuck it, man. At this point, why not? It's a company called LXRX, Lexicon Pharmaceuticals. Bro, the Patreon people have just been killing it. Like we have been. Are you in it?
Mm-hmm.
Why, man? I sent this stuff to you, dude.
I know. I don't read. I can't read everything, and I don't blindly invest in everything, right?
That's true.
I like to read things and be on it, right? So just like when you were like, Matt, take a look at SLG. You sent it to me personally. I was like, let me do some deep diving on that, and I was pleasantly surprised. I may have felt the same on this one. But so I just never.
I'll give you guys the quick and dirty about this company. All right. Lexicon Pharmaceuticals has been around for a long time. They had a string of couple of failures with one of their key drugs, Empefa, which is, I'm not even going to try to pronounce its molecule name, but essentially it was approved for heart failure for patients probably around May. The thing, though, was that there's already two key players in the market. One company is called Jardiance, another one is called Farxiga. Both of them have similar mechanism, which is called SGLT2 inhibition. So this one has another mechanism that's attached to it too. My wife's the pharmacist, so she could probably explain this way better than I can. But the point is that this is a viable third competitor, and it was recently released, approved by the FDA. But what's more important is this right here, Express Scripts. They actually, which is one of their largest PBMs, approved them to be on their formulary. So because they got this preferred share, the preferred plan, what is that thing called? Preferred formulary access. Now doctors can actually prescribe this stuff, which is really good because this could be a competitor to the two other companies, which are really big. So if you look at AstraZeneca, in the first half of 23, AstraZeneca generated about 2.8 billion in Farxiga sales, up almost 40% from the year prior. Eli Lilly did about 1.25 billion in Jardiance sales. So if you combine this, which is about 6 billion here and about 2.5 billion here, that's a close to $11 billion of spending that goes into this drug category. Now, these guys are very new into this, so they could theoretically undercut, to get this into the hands of patients. And there's also some evidence that there's actually some benefits and superiorities over the current market leaders. And so right now, Lexicon does not even have a big daddy partner. They had Sanofi was a big daddy partner for them. Most of the smaller pharmaceutical companies, they have deals with the bigger ones to do all the distribution and everything else. So they don't have anyone. So basically they own the molecule on its own with the indication that they need. And so the likelihood for this is that either they are very undervalued and they're going to do exceptionally well going forward in terms of sales, and their number of scripts has been growing like crazy. Or the other thing that might happen, which is a big guy might come in and buy them out. Now, what I saw in these guys about a month ago is exactly why I took a sizable position in it. But here's a really cool thing that happened today that not even the Patreon people that really know about it just yet, but I'll break it down here. Do you know who this is? Mark Lambert?
That name is so familiar. I have no idea.
Okay, Mark Lambert owns a hedge.
Oh, that fucking guy? Sorry.
Not that guy, not this guy.
Not this guy. I've seen that guy before. Yeah.
Yeah. Not this one. Right here, BVF Partners.
Yeah, I don't know.
Control C. So if you go here to this partner, he's a billionaire. Basically, the company owns a crap ton of things. But essentially, what they do is they invest primarily in biotech companies. Well, it turns out one of the things with the SEC filing, and it's not even 100% on their website yet. So if you go to here, no, thank you, LXRX, which is Lexicon. Right here, you see this? 214, which is today. What do you think's been happening? Buying. Right?
Oh, is this because of the 13Fs that are made public today?
Yep. Not to mention, if you look at all the insiders, they were all buying as well. Look at this.
Interesting.
So kind of cool to see a lot of insider buying at a company that's barely $2-3, right? And has the potential to be a blockbuster company. So then you look at also like in November when the Express Scripts news was announced. Right before that, look what happened. You see all of this stuff? This was all insider purchases. Yep. So
interesting.
That's
insider exclusive with Mr. Patel.
Yeah. So I'd say So like I said, there could be some huge possibilities going forward. So Zoe, you are a nurse. You know Farxiga.
I've seen
You know the
Jardians
other
before. Yeah.
Jardians. Yeah. It's for heart failure patients. Primarily, the biggest benefit, Zoe, for this is that the readmission rates are much lower. So just keep that in mind. So one of the challenges with hospitals is for reimbursements is with readmissions. If you get readmitted within a certain time period, then you don't get any additional money. So if you get discharged, you get readmitted, you don't get money, right? You don't get any additional money. So the longer you can keep the patients out the hospital, the more money you can collect. So essentially, that's the play here. So.
Very good. Well, I think we can pause it there. I think phenomenal work. As always.
I love Dex. Dex is like, invest in some Mucinex.
Yeah, invest in Mucinex. Sure.
It's true, dude.
So for you guys, I have stopped actually sharing the live streams after we're done. So once these are done, they get unlisted, and I'm actually going to post them onto the Cashflow Chronicles TV channel. So that's been working really well. I want to say thank you guys have been supporting Kris. We're getting like 600, 700 views on our more recent Cashflow Chronicles after we've now finished all of our backlog. So for you guys, 100 of you so that are in here, we finished up the uploading of all the backlog, and we are strictly on now just uploading the new content. So number 69 really well.
I want to just clarify one thing really quickly. The indicators for the other one is diabetes. Basically, you take the medicine and you pee out the excess sugar. It does cause UTIs. So Jardians, and like I said, Zoe's a nurse, so he'll know exactly what I'm talking about. But this one has some protective things for heart failure patients too. So like I said, do your own DD, do your own research, but it's very important.
Yeah, good thoughts. So yeah, for those of the folks that are in here, the replays will be available. All of our previous replays for all the other 70 odd chats that we've done, with the exception of a few that they won't let me download for, I guess we've done some things where we've done some copyright stuff where we've put too much stuff in or watched too much Disney or something like that. They won't let me download those. And they've actually permanently removed them from YouTube. So unfortunately we can't get some of them. But the majority of the 70 are up there. And so really excited for you guys to be on this journey with us. We've almost hit 4,000 watch hours. We're almost at 750 subscribers over there. And so eventually in the coming months, if not coming weeks, Kris eventually and I will maybe transition over to there full time. But it might take some time before that happens. But in the meantime, this is the avenue that we're going down. So as always, appreciate everybody. Kris, any final words before we?
No, just it's a good year. Hopefully it keeps getting better and better, man. We'll see what happens.
I've been joking with Kris in the background before, or maybe I said it earlier. I was like, he's going to end up being like Roaring Kitty. He's going to make his money, and we're never going to hear from him again. He's just going to have a sign.
I've actually contemplated that. I
know you have. I talked to you a couple of weeks ago, and you were with everything that was going on. You were sick, and it was you were dragging. I think it was mostly because you're sick, and I think you couldn't juggle everything. But hopefully that's not the case. But I can understand it does drag on a little bit sometimes. But Kris is a gem in the community, and we've all learned and been much better because of him. So hopefully we can continue this for many, many moons. I know a lot of appreciate all the work that Kris is putting in there. So yeah, that's it. No last thoughts on any of that?
No, cool. I think that's it, man.
Cool. Well, if it works tomorrow, we'll see you then. If not, we will see you guys next week. And Kris and I might start doing Sunday streams. We haven't solidified it yet. Obviously, Super Bowl was last Sunday, so I didn't even push it. I had a good time watching. I was hoping that the Chiefs would lose, but it is what it is. But I think most people are just upset that Taylor didn't get proposed to on the 50-yard line like everyone bet on. So I'm out a couple $1,000s because of that.
Nah, bro. I don't think the contract extension went through. Sorry.
No, I don't think so. I think that there's going to be a drastic breakup here in the coming weeks, but we'll see. I was actually thinking about it. Will they sell more women's jerseys and then I was like, did they custom make for women's jerseys and then more women would buy them? And I was like, wait a second. Do they just kind of create an official women's NFL somehow, not like the panty league like they did however many moons ago, but like a legit women. And I was like, I don't know if that'll take off. Anyway, I'm just like thinking of what are they going to try to spin off in this whole fact that they have all these new women watchers in the NFL. But different story for a different day.
They'll figure it out. All right.
Yep. You guys rock. Thank you all. Cheers.
Take care.